Alright, welcome back to Build Up Trades, powered by Build Up Investments Inc. Let me give you all my quick disclaimer. I am not a financial professional. I am just sharing my personal experiences in hopes that it helps you on your trading journey. So let's not waste any more of y'all time and let's get straight into it. Got my notes as usual, and hopefully I'm giving y'all some content that'll help y'all in your journey. So you've built your budget, you've built your emergency fund, you've created your trading budget. Now it's time to do what most traders never do. Actually track and review your trades like a professional. Most traders only remember the big wins and big losses. Professionals remember the data. In this video, I'm going to show you a simple way to track your trades so you can see what's working, what's not, and how to become more consistent over time. So, why tracking your trades matters. You can't improve what you don't measure. If you're not tracking your trades, you're taking guesses. Tracking your trades help you see which setups actually work for you, spot emotional mistakes like FOMO, fear of missing out, or revenge trading. Understand your true win rate and risk to reward, and build confidence in your strategy over time. So it's good to track these things because you're able to, you have something tangible. You can actually see what's going on, what you're doing right, what you're doing wrong, how was you feeling that day, why did you get into the trade, how much did you risk, was the reward worth the risk that you put up? And as you see these things, you know what to change, what little tweaks and stuff you need to work on. So like your risk to reward, I was horrible at that when I first started. So let's say you got $1,000, you risk $1,000, but the profit, the reward is only 1% of that. So is $1,000 worth risking for $10, basically? And that helped me start seeing, all right, what kind of trades I'm getting into. Like, is it at least 10% reward at the least? But you'll come up with how much is what's worth it to you. You'll figure that out the more you trade. All right, so what to track? The simple columns. So let's take a look at the tracker. I kept it very simple, as you can see. There's not a lot to it. You may have seen other trackers and journals with a lot of bells and whistles to it, but I want to give you exactly what you need. I don't want you to be intimidated. I want it to be simple. So, starting account balance, plain and simple, enter in how much you plan to start with, whatever your account is. The date of your trade. There's a lot of obvious stuff. Your ticker, which is the symbol, the letters that companies use for their symbol in the stock market. The direction of the trade, was it a buy or sell for you? The entry price, how much did it cost you to enter? The exit price, how much was it for you to exit? Your position size and dollar amount. So so what was the total amount of how much you put in? So let me go back. The entry price, let's say stock ABC was $10. So that's your entry price. Let's say ABC stock, the price went up to $20. So that's your exit price. But here, you're gonna enter how many shares or how many contracts you bought. So if you had, if it's $10, you bought 5 shares, that's gonna be $50. So it costs you, your position size was $50 basically. Your P&L, profit loss in dollars, and your profit loss in percentage. And you'll find that a lot of this is a percentage game. Like, percentages are your best friend when it comes to trading. And my favorite column, emotions. Like, how were you feeling that day? When you entered this trade, what was your feeling? And then we have notes. So what would you do better next time, basically? Or you can put in what was going on that day. A lot of times you may have things going on in your personal life that will distract you or hinder your good decision making when it comes to entering trades and making trades. You could have got into an argument with your partner, your significant other. Your kids could have got on your nerves for the day, like, and that could have threw you off. And now I'm angry today, and I entered this trade because I wasn't focused. So that's it in a nutshell. That's it, simple, clean, but powerful at the same time. So let's talk about the emotion column. This is a hidden edge. Your hidden edge is understanding your emotions during the trade. So most traders ignore this, but it's one of the most important parts of the tracker, the emotions column. This is where you log how you felt during the trade. Calm, rushed, fearful, greedy, revenge trading. This is where you enter all of that emotions column. So over time, you'll start to see patterns. You might notice you lose most when you're forcing trades or when you're trying to win back previous losses. Once you can see the pattern, you can start changing it. So how to use the tracker after each trade. Here's how I recommend you use this tracker. Number 1, after each trade, take 30 seconds to log it. So you usually want to make sure right after you finish, you enter your trade, you want to go ahead and enter it, like journal it right then and there. Because sometimes if you wait too long, you'll forget and it'll be hard to make it a routine. So that's the first thing, is enter your trades, enter your journal right after your trade. Number 2, be honest about your emotions. This is just for you. So if you feeling sad or mad or irritated, like, is only for you to see. So be honest with yourself. The only way anybody will see it is if you share it. And if you share it, hopefully you share it with somebody you can trust and supportive. So number 3, add one quick note, what you did well or what you change. So basically, why did you enter the trade? And if one word in the emotions, in the emotions column, if it's one word that it doesn't describe enough, you can use the notes to describe more. So if you felt, one of my issues was rushing. So, all right, why did I rush? I felt like it wasn't enough. I was going to lose even more money. I didn't want to miss out on making more money. Like, that's why I rushed, and it backfired on me instead of just staying patient. So I can make those notes to help me out and figure out what I need to change. So that's it. Don't turn it into a homework assignment. Make it part of your daily routine, or part of your routine as you trade. I trade every day that the market's open, so that's my daily routine. But when I say don't make it a homework assignment, that means don't just do it for a couple of days. I did it, completed, that's it. No, this is a part of helping you become better. And you're collecting data on yourself in the market, and you can go back and see, all right, things didn't work out so well when I felt this way, or when I did this setup. That setup didn't work out. Do I need to tweak this? Do I need to not trade on the days that I feel gloomy or whatever it is? Those are just a few examples. My next suggestion is weekly review. Turn data into lessons. So once a week, sit down and review your trades. Look for your win rate for the week, your total P&L, which setups work best, which emotions led to your worst trades. Ask yourself, if I only took my best setups and cut out the emotional trades, how different would my week look? That question alone can change how you trade. So if you look at all your bad setups, like all your bad trades, all your negative trades, all the trades that you lost money on, look and see. Usually it correlates to a consistent emotion. At least that's what I noticed about my journal. Is I had like greed days, I had like anxiety days, but the number one emotion in my column was rushing. It was just always rushing, and then it led to revenge trading. So when I first started tracking my trades, I realized that like it wasn't my strategy. That wasn't the problem for me. It was my discipline. And that's my favorite word. And there's a reason that's my favorite word. I didn't have the discipline to stick to a plan. I didn't really have a plan. I didn't really have a strategy. I was basically guessing when I first started. I saw that like most of my bad trades came after a loss. When I was trying to make the money back quickly, that's basically revenge trading. Like I took a loss and now I'm trying to make that money back. So I lost 100. I'm trying to make this $100 back, but I'm losing 500 just trying to get this $100 back. So that's what you want to stay away from. Revenge trading is something that you really want to stay away from. And once I saw that pattern on paper, I decided to set a rule. After 2 losing trades in a day, I stopped. That's it. Close my laptop, log out of my account. I'm done for the day. That one rule, based on tracking my trades, helped me keep more of my profits and protect my capital. So, and that's what it's all about, like protecting your capital. That's the number one goal, is to make sure we don't lose money. It's great to make as much money as you can, make a lot of money if you can, make a lot of profit. I want everybody to make as much profit as they can. But you can't go into every day thinking, oh, I'm gonna make this much. Always keep the number one thing first is we're not trying to lose money today. That's the best advice I can give you. You're not trying to lose money for the day. So that's it. That's what I got. And I hope this helps y'all. If you want to trade like a professional, you have to review like a professional. Download it using the link below. Start logging your trades and commit to a weekly review. Your goal isn't perfection, it's progress. If this helps you, like the video, subscribe to Build Up Network, and share this with another trader who needs more structure. And remember, financial freedom starts with structure. Thank y'all for watching and listening, and I'll see y'all on the next one.